If Bitcoin is holding above $70,000 and Ethereum is quietly surging in the background, you might want to stop everything you're doing right now, because what is unfolding in this market could be the beginning of something much bigger than most people are prepared for. Welcome to Crypto Hub, your trusted source for professional, no-nonsense analysis of the digital asset market. Whether you are a seasoned investor who has been in this space for years or someone who is just beginning to understand what blockchain technology and cryptocurrency can do for your financial future, you are in the right place. Today, we are diving deep into one of the most critical questions dominating the crypto conversation right now. Is Altseason finally starting? Bitcoin is holding its ground above the $70,000 mark. Ethereum is making a notable move upward, and the broader altcoin market is beginning to show signs of life that have not been seen since the last major bull cycle. This is not speculation. This is analysis grounded in market data, on-chain metrics, and the kind of structural behavior that has historically preceded explosive altcoin rallies. So let us break this down carefully, professionally, and thoroughly, because the decisions you make in the next few weeks could have a significant impact on your portfolio for years to come. Let us begin with Bitcoin, because Bitcoin is always where the story starts. For the past several weeks, Bitcoin has demonstrated an extraordinary level of price resilience, holding above the $70,000 threshold even in the face of macroeconomic uncertainty, interest rate volatility, and ongoing regulatory noise from various governments around the world. This is not a small thing. Holding above $70,000 means that institutional players, the hedge funds, the asset managers, the publicly traded companies that have been accumulating Bitcoin on their balance sheets are not selling. They are holding. And when institutions hold, it signals confidence. It signals that the smart money believes the current price level is not a top, but a floor. To understand why this matters so much, you have to think about market structure. Bitcoin's dominance, meaning the percentage of total crypto market capitalization that Bitcoin represents, has been elevated for a significant portion of this current cycle. When Bitcoin dominance is high and rising, it typically means capital is flowing into Bitcoin, often at the expense of altcoins. But here's the critical dynamic that every serious crypto investor needs to understand. When Bitcoin dominance begins to plateau and then roll over, when it stops climbing and starts to decline, that is the signal that capital is beginning to rotate out of Bitcoin and into altcoins. That rotation is what triggers Altseason, and right now the early structural signs of that rotation are beginning to appear. Bitcoin holding above $70,000 while Ethereum simultaneously surges is precisely the kind of market behavior that precedes capital rotation. Bitcoin is not crashing. Bitcoin is stable. That stability gives investors confidence to take on more risk, to move capital into assets further down the risk curve. Ethereum first, and then the broader altcoin market. This is a pattern that has repeated itself in every major crypto bull cycle, and the market is once again beginning to set up in a way that looks familiar to those who have been paying attention. Now let us talk about Ethereum, because the Ethereum surge is perhaps the most important piece of this puzzle. Ethereum has been a complicated story for much of this cycle. After its transition to proof of stake and the implementation of EIP 1559, which introduced a fee-burning mechanism that makes Ethereum deflationary under high network usage conditions, Ethereum's fundamental value proposition became significantly stronger. But the price had not fully reflected that strengthened fundamental picture until now. The recent surge in Ethereum's price is not happening in a vacuum. It is being driven by a convergence of factors that, taken together, paint a compelling picture of sustained upward momentum. First, there is the matter of Ethereum exchange-traded funds. The approval and launch of spot Ethereum ETFs in major financial markets opened the door to a new class of investor, the traditional finance participant who wants exposure to Ethereum but is not comfortable managing private keys, hardware wallets, or the technical complexity that comes with self-custody. These investors can now gain Ethereum exposure through familiar brokerage platforms, the same way they buy stocks or gold ETFs. The inflows into these products, while perhaps not as dramatic as Bitcoin ETF inflows initially, represent a structural and sustained source of demand that simply did not exist in previous cycles. This is new demand, and new demand, when supply is constrained by deflation and staking, means upward price pressure. Second, Ethereum network activity has been increasing. Layer 2 solutions built on top of Ethereum, platforms like Arbitrum, Optimism, Base, and others, have been processing an increasing volume of transactions. And while these transactions occur on the Layer 2 networks, rather than directly on Ethereum's base layer, they still drive demand for Ethereum as the underlying settlement layer. Every Layer 2 ultimately settles to Ethereum. Every bridge, every cross-chain transfer, every decentralized application operating within the Ethereum ecosystem contributes to the overall health and activity of the network. That activity is reflected in Ethereum's price, and right now, activity is trending upward. Third, the supply dynamics are worth examining closely. A significant percentage of all Ethereum in existence is currently staked, locked up by validators who are securing the network and earning staking rewards. This staked Ethereum is not available for sale on the open market. When you combine that with the deflationary burn mechanism, you have a situation where supply is constrained on multiple fronts simultaneously. When demand increases against constrained supply, prices rise. This is not a complicated concept, but it is a powerful one, and it is one of the primary reasons that many serious analysts believe Ethereum's price appreciation in this cycle could be substantial. Now let us address the central question. Is Altseason finally starting? To answer this properly, we need to define what Altseason actually means and what the historical data tells us about how it begins, how it progresses, and what it looks like when it is in full swing. Altseason is the period in a crypto bull market cycle when altcoins, meaning every cryptocurrency other than Bitcoin, begin to outperform Bitcoin on a percentage basis. During Altseason, it is not uncommon to see mid-cap and small-cap altcoins generate returns of hundreds or even thousands of %, far outpacing Bitcoin's gains during the same period. Historically, Altseason has followed a relatively consistent sequence. Bitcoin moves first, establishing new price highs and attracting institutional and retail attention. Then Ethereum begins to move, often serving as the bridge between Bitcoin's institutional appeal and the broader altcoin market's speculative energy. Then the larger cap altcoins begin to move, the projects with established ecosystems, real users, and recognizable brand recognition within the crypto community. And finally, the smaller cap altcoins and emerging sector narratives, artificial intelligence tokens, decentralized physical infrastructure networks, real-world asset tokenization projects, Layer 1 blockchain challengers, all begin to surge, often with the most dramatic percentage gains of the entire cycle. Where are we in this sequence right now? Based on the current market data, we appear to be in the transition between Stage 1 and Stage 2 of this historical pattern. Bitcoin has established itself above $70,000. Ethereum is surging. The larger cap altcoins, assets like Solana, Binance Coin, Avalanche, Polygon, and others with significant market capitalizations and established ecosystems, are beginning to show technical strength and increasing volume. The smaller cap altcoins, by and large, have not yet experienced their major moves. That is significant. It suggests that if the historical pattern holds, there is still a substantial portion of this cycle's Altseason gains ahead of us. But it is important to be precise here, and to not overstate certainty where uncertainty exists. The crypto market in this cycle is operating within a different macroeconomic context than previous cycles. Interest rates, while potentially beginning a descent from their recent highs, are still elevated by historical standards. The regulatory environment, particularly in major markets like the United States, has become more complex and in some ways more restrictive for certain categories of crypto assets. Institutional participation, which has grown enormously, brings with it a different behavioral pattern than retail-dominated markets. Institutions are generally slower to move, more disciplined in their position sizing, and more responsive to macroeconomic signals. These factors do not negate the historical patterns. They do, however, mean that the timing and magnitude of any Altseason in this cycle could differ from what we have seen before. A more institutionally mature market might see Altseason unfold more gradually, with less explosive day-to-day price action, but potentially more sustained trends over a longer time period. Or conversely, the addition of institutional capital could amplify the eventual move by providing deeper liquidity and greater price support at higher levels. The honest answer is that we do not know with certainty which of these scenarios will play out. But the probability of Altseason beginning to materialize is rising as each week passes. Let us also examine some of the specific sectors and narratives within the altcoin market that are most likely to attract capital if Altseason does materialize in a significant way. The artificial intelligence and crypto convergence narrative has been one of the dominant themes of this cycle. Projects that combine blockchain technology with artificial intelligence, whether through decentralized AI computing networks, AI-driven trading protocols, or tokenized AI agent frameworks, have captured enormous attention and have attracted significant speculative capital. If Altseason accelerates, AI-adjacent crypto projects are likely to be among the biggest beneficiaries, given the broader cultural and financial obsession with artificial intelligence that is currently reshaping every industry. Decentralized physical infrastructure networks, often referred to as DePIN projects, represent another sector with significant Altseason potential. These are projects that use token incentives to build real-world infrastructure. Wireless networks, storage networks, energy grids, mapping services in a decentralized, community-owned manner. The DePIN narrative combines the speculative appeal of crypto with tangible real-world utility, which gives it broader appeal across both crypto-native investors and more traditionally minded technology investors. Real-world asset tokenization is another narrative that has been gaining traction among institutional participants. The idea of putting traditionally illiquid assets, real estate, private credit, commodities, fine art, onto blockchain networks where they can be traded with the speed and efficiency of digital assets has attracted interest from major financial institutions. As regulatory clarity improves and infrastructure matures, the tokenized real-world assets sector could become one of the largest value creation opportunities in the entire crypto ecosystem. Layer 1 blockchain competition remains a perennial source of Altseason energy. Ethereum's competitors, Solana, Sui, Aptos, and others, continue to compete for developer mindshare, user activity, and ecosystem capital. Solana, in particular, has demonstrated remarkable resilience and continued growth following the turbulence of previous years. Its high-speed, low-cost transaction environment has made it particularly attractive for consumer-facing applications, meme coin activity, and mobile-first crypto experiences. If Altseason arrives in force, Solana and other high-performance Layer 1 blockchains are likely to see significant capital inflows. The decentralized finance sector, despite facing headwinds from regulatory uncertainty in some jurisdictions, continues to evolve and mature. New financial primitives, improved user interfaces, and the integration of real-world assets into DeFi protocols are expanding the addressable market for decentralized finance. As Ethereum's price rises and Layer 2 activity increases, DeFi protocols built within the Ethereum ecosystem typically see increased usage, fee revenue, and token price appreciation. Now, a critical word of professional caution, because at CryptoHub we believe in giving you the complete picture rather than just the parts that feel exciting. Altseason, while historically a period of extraordinary returns, is also a period of extraordinary risk. The same conditions that produce massive gains, high speculative energy, rapid capital rotation, FOMO-driven retail participation also produce devastating losses for investors who are not disciplined. Projects with weak fundamentals, anonymous teams, unaudited smart contracts, and no real product or user base can surge dramatically during Altseason on nothing but narrative and momentum. And then they can lose 90 or 95% of their value just as quickly when the tide turns. This is why professional risk management is not optional in crypto investing. It is essential. Diversification across multiple sectors and market cap tiers, position sizing that reflects the risk profile of each individual asset, clear entry and exit criteria established before emotions take over, and regular portfolio rebalancing are all practices that separate successful long-term crypto investors from those who ride the wave up only to give everything back on the way down. If you are positioning for Altseason, do so with discipline, with research, and with a clear-eyed understanding that the downside risks are just as real as the upside potential. It is also worth monitoring the macroeconomic backdrop closely. Central bank policy, inflation data, employment figures, and geopolitical developments can all influence risk appetite in financial markets broadly, and crypto, despite its unique characteristics, is not immune to macro forces. A sudden shift in interest rate expectations, a significant geopolitical shock, or a major regulatory development in a key market could interrupt or delay an alt season even if all the crypto-specific indicators are pointing in the right direction. Staying informed about the broader financial environment is part of being a serious crypto investor in the current era. On-chain data is one of the most powerful tools available to crypto investors who want to assess the health and trajectory of individual projects. Active addresses, transaction volume, total value locked in DeFi protocols, wallet concentration metrics, and stablecoin supply movements all provide real information about what is actually happening within a blockchain ecosystem, information that is independent of price action and market narrative. As alt season potentially begins to unfold, paying attention to on-chain data for the projects you are interested in can help you distinguish between genuine ecosystem growth and pure speculative froth. The overall picture, as we synthesize everything we have covered today, is one of cautious optimism grounded in data. Bitcoin's resilience above $70,000 provides the foundation. Ethereum's surge provides the catalyst for capital rotation. The historical patterns, the sector narratives, the institutional infrastructure that now exists, and the on-chain activity trends all point in a direction that is consistent with alt season beginning to develop. Whether it unfolds quickly and explosively or gradually and steadily, the opportunity for well-positioned, disciplined investors appears to be real and potentially significant. The market is communicating something right now. The question is whether you are listening carefully enough to understand what it is saying and whether you are prepared to act on that information in a thoughtful, structured, and responsible way. The investors who do their homework now, who understand the sectors they are investing in, who manage their risk appropriately, and who maintain the psychological discipline to hold through volatility and take profits at rational levels. Those are the investors who historically emerge from alt season with life-changing gains rather than cautionary tales. This has been your in-depth market briefing here at Crypto Hub. We have covered Bitcoin's critical hold above $70,000, the significance of Ethereum's surge, the historical patterns that define alt season, the key sectors positioned to benefit from capital rotation, and the essential risk management principles that every serious investor should have in place. The crypto market rewards preparation, punishes complacency, and operates at a pace that waits for no one. Stay informed, stay disciplined, and stay connected to Crypto Hub, because the analysis you need to navigate this market with confidence is exactly what we are here to provide. If this update delivered value to your understanding of the market, share it with someone who needs to hear it, and make sure you are subscribed so that you never miss what comes next. This is Crypto Hub, and we will see you in the next one.